So here's a trade on S&P this morning. Every single trade I convert to 1 minute chart on purpose to show you the power and accuracy of the method to the tick. Price reached the end of the minor trend and collapsed as expected. And exact same thing happened on Netflix. It's all the same. Netflix had been dancing at the end of the minor trend since July. Buyers are weak. This is not the place to buy. It's all the same exact formula. So is there a reason that buyers keep coming on the Netflix since the month of August? Of course there is. We're dealing with very weak buyers and very weak sellers. This is Netflix before earnings. If Netflix collapsing to the end of the minor trend, ultimate key Fibonacci support, do you know what to do with your position? Knowledge is power. Only if you know what to do with your position, you will succeed. As you witnessed S&P do this morning. Do you remember? This is the end of the minor trend that S&P respected for almost over an hour. Key target, price collapse 9 points from this level. As I said to you, here's your other 20%. Next. Anyone surprised? Should not be. It's all the same. Exact same thing on S&P 1 minute chart, where S&P bounced from the end of the minor trend and struggling at right now will be on Netflix. It's all the same, traders. Nothing less, nothing more. Knowing the rules where to place your trade is a key. This is the end of the minor trend. Sellers are strong, price will crash, drastically lower down. I don't care what the earnings are. The only thing I promise you, this support holding the key on Netflix. And once again, no surprise where buyers came from on Netflix in the month of March, trend inception. And again, no surprise where market sold off as it reached Fibonacci reversal zone. What a dance. An exact same support where Netflix is dancing at right now is exact same place playing out right now across the board on multiple instruments. And just to remind you, this was Apple when it came out with the worst earnings in 13 years at 91. As I said, it doesn't matter what the earnings are. Apple respected this support for over a year. As I said, it's posted on LinkedIn and social media and videos everywhere. As long as this key support respected, Apple will head higher. Every single chart is exactly the same. Does not matter what you trade. This is Netflix before earnings. This is Apple before and after earnings. Take a look. As S&P reminding you to the tick once again, the end of the minor trend is next. It's all the same. So if you understand the rules and you know what you are paying attention to at key support, you know what to do. If you don't, speculation is not an option. I don't care how spectacular or horrific the earnings are. All I can tell you, this support is holding the key for Netflix. And most importantly, S&P came to the brick wall. Anyone surprised? Should not be. It's a problem. Shock or not. That was Apple. Do you remember Apple at this level at 181? Do you remember where buyers came from? Will the Netflix do exact same thing as Apple had done? Skyrocket from this support, just like Apple done outside of horrific earnings? Apple respected 181 for months and months, and they skyrocketed to 194. This is S&P in front of you right now on 1 minute chart. It's all the same. And prior, what did 1 minute chart do? Broke through this level and headed higher. Correct? It's all the same. Which is exactly what Apple had done. Broke through 181, struggled at this level for over a year, came to 195, 194 area, and key resistance became key support. Do not short. So why in the world is Apple in so much pain? Simple. Apple reached reversal zone. Do you remember where S&P opened up this morning? Buy at trend inception, not at reversal zone. This support is holding the key on Apple. Bullish rally exhausted. Apple in a whole lot of pain. I do not know how long S&P will be in pain. All I know, once again, it touched this level to the tick. 10 years of work with price action and Fibonacci is your shortcut to success if you take the course. Do you want to trade Netflix? Do you want to trade Apple? Choice is yours. Market in a whole a lot of pain. Overextended bullish rally reached a brick wall. Overextended sell-off on Netflix dancing at key support. Let me remind you what happened at the exact same level on Euro. Do you remember this on Euro? This was Euro on monthly in 2015-2016. Key support respected. Do you know where Euro is right now? Euro sold off after it skyrocketed from this key support, trend inception on monthly, trend inception on weekly. Bullish rally skyrocketed and reached reversal zone. This was sell-off this year on Euro. What is Euro doing right now? Euro in a whole a lot of pain. Dancing in major correction as Euro oversold. What is not letting Euro through? This key Fibonacci resistance. It's all the same, traders. Rules are met, take a trade. Rules were met on Euro, buyers stepped in. Rules were met on Apple, buyers stepped in. Rules were not met on pound. Do you remember this on pound? 3600 level. Pound respected this level for 7 years. Do you remember what pound collapsed to? All these levels present well before Brexit. Pound broke through this level and went into free fall. No surprise whatsoever. Pound reached Fibonacci reversal zone after it collapsed through the end of the minor trend, and that's where buyers stepped in from. No surprise. So buying Netflix randomly will not work when Netflix at the time of the earnings at key support. Only if rules are met you can take a trade. Rules had been met on Euro, rules had been met on Apple, rules had been met on S&P. Will the rules be met on Netflix? Knowledge is power. Hand holding will never work. It is that simple. Rules are met, take a trade. I don't care how spectacular or horrific the event is. All I care, what price action and Fibonacci telling me. Time and time again, it's all the same. S&P reached key Fibonacci resistance and struggling in pain. Exact same place where Netflix had been in pain for months and months and months. Since the months of July all the way through the month of October, not the place to buy. That's a dance on Netflix, traders. It's all the same, just like you see in the trading room on S&P. Price action remains the same. Choice is yours, what you choose to trade. I would love for S&P to collapse this morning. Why? Simple. Just like Apple, S&P at reversal zone. Take a look. As I warned you, do not buy outside of decision point 2. This is a place you exiting completely, as you learn in the course, no matter what you trade. Pulling a trigger randomly will never work. What a market we dealt with this morning, no matter what chart you trade. And just to remind you, where market started selling off in the last 2 months. Do you remember this? Bullish rally started in early September at trend inception. Price reminded you if you will ever ignore decision point 2, success is not possible. FOMC market collapsing from the end of the minor trend present in the room for weeks. And this is famous day of second worst day since January this year, when S&P started collapsing completely. And right now in front of you, price reminding you, it's all the same. As price has taken massive pause again and again and again at the end of the minor trend. Buying at trend inception is drastically more conservative trade than buying over extended bullish rally. What a market we're dealing with. But time and time again, only knowledge of price action and Fibonacci will keep you on the right side of the market. Nothing else ever will. All you have to do, play by the rules. And if you do, the skies are the limit. Just to remind you, this is institutional chart as you learn in Fibonacci Mastery course. You learn how to use these levels, you learn how to trade with institutions. You master the basics and foundations. You want to learn more? Add this to your portfolio. Market sold off because price reached Fibonacci reversal zone. Market is rallying because price reached Fibonacci reversal zone. All present in front of you for months and months and months. It's all the same. This is the only problem this morning, time and time again. And if you love oil, I would like to remind you, famous 55 level on oil. Oil danced at this key resistance at 55 for over a year. Oil started pulling back in April 2016, key support respected. Key resistance is a problem for over a year. Half 2016, entire 2017. At the end of 2017, price breaking through. This is S&P in front of you right now. Just like oil. It's all the same. What you will decide to trade, absolutely up to you. No surprise where oil is selling off, none whatsoever. No surprise how much pain oil had been because it came to decision point 2. Key level currently is key support. This is the range on oil. Cannot short into key support. Browse the news on oil going back many months. Horrific bearish news does not mean a thing. Fibonacci means everything. That pure and that simple. What do you decide to trade? The choice is yours. We're setting up for extreme markets, traders. Are you prepared? Extreme volatility will require extreme execution and ultimate knowledge. Your decision-making process will need to be a lot faster, a lot more confident, a lot more powerful. And if you are a knowledgeable trader, opportunities in the markets will be spectacular. But only if you play by the rules you can succeed. Because of the events in the market, because of the historical formations, for a limited time only, first time ever in 8 years of teaching, I'm offering Basics Fibonacci Foundations course. 8-week course for a limited time only, limited space only. Please review the information on the website. Please listen to the students. Spaces are filled. We're done. We're not doing any more of this. No plans whatsoever, only for the next 8 weeks. Fibonacci Mastery Group courses are going, where we dissect long-term charts, where we go back all the way to 2008. We're looking at the institutional charts, we're looking at institutional levels. This is 3 months course where we will dive straight into complexities of the price and Fibonacci without any smallest details. Any level of trader can jump in. Beginner traders take Fibonacci Mastery course all the time, as you can listen under testimonies. If you want to go all the way in and you're signing up for private mentoring, pretty please speak with me first. 6 months course includes all the courses in addition to all the group courses, all live classes, videos and modules. I meet with you one-on-one and we concentrate on the instrument of your choice. Be prepared for the times ahead. Extreme volatility is next. If you ever have a question and you would like to contact me, pretty please do not hesitate to call and email me 925-257-4298 or info@fibinstitute.com. But please review the information on the website first. Critical times in the markets. Please be prepared. Be on defense. Be a knowledgeable price action and Fibonacci trader. And if you are, the skies are the limit. As price reminding you once again, speculative stop, speculative target will never work. Price told you very clearly where the stop is. Price show you very clearly where the target is. Never ignore that. And once again, hour and a half later, trail is placed in flawless place and price came very close to ultimate level. Price does not have to touch this level by a tick. Why or why? Because this is long-term level. This is your range before we close the room. Once again, Fibonacci kept you on the right side of the market. Once again, stop was placed in flawless place. Once again, only if rules are met, you can take a trade. Rules are not met, do not touch this market. Do not speculate. Do not stress yourself out. It will never work. Only knowledge does.